Welcome friends, Agostino here with Bulletproof Cashflow, your guide to conquering the world of commercial real estate. That's what we're going to talk about today. Now, before we dive in, let me tell you that commercial real estate is a little different than doing your residential stuff. It's a whole different ball game. The calculations, the language, the strategies take some getting used to, but once you master it, once you understand it, you can build a real estate empire of your own in the commercial space. That's why I've packed a bunch of information in this webinar to help you with the crucial information you're going to need to elevate your investment game. Now, I've done over 700 videos over on a YouTube channel that break down the various aspects of commercial real estate totally for free. So go ahead and check it out. The Bulletproof Cashflow YouTube channel will include a link in the description afterwards, okay? And when this thing goes live too on YouTube, we'll send out a link too, and you can check it out there. Check out the channel, all right? Got a bunch of great information out there. So the cool thing is that I got a proven formula for success. I've implemented it numerous times before, and I'm here just to help you do the same sort of thing, okay? But we're going to cover everything from the different asset classes. We're going to talk about cash flow versus appreciation today, the different strategies related to that, and how to maximize returns. Now, my specialty is multifamily, and I love multifamily. It's what I've been doing, right? But my team and I also do large-scale multifamily development. And we also have net lease as well. Net lease is a very big part of our future strategy as well, as far as acquiring Dollar Generals, Dollar Trees, Walgreens, stuff like that. So when it comes to commercial, I've seen and done a lot of different things. Okay, so get ready to learn how to achieve financial freedom through smart commercial real estate investing. No pitches, just the real deal. That's all we're talking about. Okay, so strap in and get ready for some exciting commercial real estate stuff. All right, something I truly love doing. All right, so first, what is commercial real estate? Okay, so commercial real estate sounds really fancy and intimidating. It's not. Okay, at its core, commercial real estate refers to a property intended for a business to generate income, meaning the properties are leased or rented to a tenant to earn revenue, to earn income. Okay, this includes an office building, apartment buildings, shopping malls, hotels, hospitals, basically any property used for business purposes. So these are the hubs of economic activity in our communities. So when you think about it, commercial real estate is all around us. This differs greatly from residential real estate, where you get a mortgage for a home that you live in. So you may think, well, what about a residential multifamily? What about a duplex or something? Well, a duplex contains 2 units, a triplex is 3 units, a fourplex is 4 units, right? This could be a good starting point for multifamily investors, but for lending purposes, these are considered residential properties. Okay, so they qualify for residential lending programs. If you do 5 units or more in any of those multifamily examples I just talked about, then it becomes commercial. Okay, the cool thing is with those residential loans, you can put very little money down, you can put very little money into the deal, and you can still get the residential loan, which is typically a higher leverage type scenario, because in a residential scenario, they know that you're going to be living there. And since you're going to be living there, the chances of a default go much lower. That's why you're able to get better rates on stuff like that. Okay. A commercial is a little different because again, it's for business purposes, So let's break down the basics so you can start the journey towards financial freedom through commercial real estate. Okay. So let's talk about the benefits of commercial real estate. So commercial real estate investing is really cool because first, when you buy the commercial real estate, you can provide monthly cash flow for yourself and for your family. The rental income generated can deliver consistent returns to help you achieve your financial goals. So that's passive income. Commercial real estate also has massive wealth building potential over the long term because you also get that appreciation. Again, it's a business. And if you're able to improve the asset to drive the revenue, really it's the revenue that people are valuing when they go to buy the asset. That's how you get appreciation, especially when it comes to multifamily. Okay, But you're able to build some serious equity when you're doing all that, when you're taking this say a multifamily asset and you improve the exterior, make it look great. You increase the rents. When you improve the NOI of this business, you improve the asset valuation, you build more equity, and you can sell it for more money. All right, so it's a very different type of scenario than the residential side. Okay, forget the stock market roller coaster. Commercial real estate offers way more stability and upside. And again, if you do it properly in the right type of asset, you pay the right price for the asset, and you execute the right business plan on the asset, banks love doing those deals. They love them. Banks are not knocking down your door asking you to invest in their stock, are they? No, but they will bang down your door and ask you to compete for your business to buy a nice commercial asset. They'll certainly do that, right? So it tells you something, right? With the right property, you could be looking at some decent returns, 7 to 15% a year, again, depending on the level of risk associated with the deal and what your overall business plan is. That's really what it comes down to. But if you're doing, like, say, net lease, returns are less because over the long term, you have a corporate tenant in there, it's with a corporate guarantee. The lower the risk, the lower the return, all right? If you're doing high risk type of deals, conceivably, and you're doing it properly, it's higher risk, higher return. It's the same sort of thing that you probably heard of just by, in the regular course of a day, you hear those types of things, greater risk, greater return. Same sort of thing applies to commercial real estate, right? You want to take a very measured risk when you are putting these types of deals together. The cool thing is that you don't need to be a millionaire to get started. You can begin investing in commercial real estate with a small amount of money, okay? And if you're smart, if you know what you're doing and you really start in getting into the right sort of deals. Maybe if it's a passive investor, doesn't always mean you have to be the person going out there and buying some big deal. You could also be investing as a limited partner in some of these deals too and learn the ropes to make sure that you understand the full breadth of what you're getting into. Okay? Ultimately, it's about getting control of your financial destiny and understanding how these sort of things work. Okay? So let's talk a little bit about the two types of commercial real estate investment opportunities, okay? So when it comes to commercial real estate, there are two main strategies, at least ones that I follow anyway. The first is cash flow markets or cash flow investments, okay? These are investments focused on regular, steady returns on a fairly regular basis, okay? The focus is not on appreciation. The focus is solely on cash flow. That's pretty much all I do. I do not do the appreciating markets. And what I mean by cash flow markets is places that are, they'd be considered sleepy comparatively to, say, New York City or Los Angeles or Miami, right? Here in Cleveland, for instance, right? Cleveland is a cash flow market. It's good, steady returns. You don't have the wild swings like you would over in New York City, for instance, right? The investors tend to target assets like multifamily, for instance, or retail centers or self-storage facilities, these types of things that generate reliable cash flow each month, and it's very, very steady, right? So if you're able to buy the asset at or below market value, all right, the yield is going to be there immediately, and you can make that a priority for yourself because now you get the steady cash flow, you're getting the return that you're looking for, okay? And then you have appreciating markets. So your cash flow markets I just talked about, appreciating markets. Appreciating markets is a little different, okay? What these assets are is largely dependent on demand, okay? So what happens is if you have one of these, say, a retail place in New York City, right? You're going to find that people will often buy these assets even at a negative cash flow. They're losing money on the deal because they're hoping that appreciation will drive the price up over time and then drive a sale later on down the road, and you're able to take the chips off the table because the asset's worth more money just because the time came in, right? That's a very different type of game. I don't do those types of games. I like to invest in cash flow only. I do not like to do appreciation. I'm not saying it doesn't work. I'm not mad at it. All I'm saying is that you have to have one strategy, in my opinion anyway. You have one strategy, you stay on that strategy, you know what you're doing, and execute it and know it very, very well. Some groups out there, they love doing appreciating markets only, and that's all they do, and they're very, very good at it. It's a whole different strategy. So, but it's good to understand what sort of market you're getting into when you're first looking at it. Because again, if you're going to pick up one of these commercial assets in one of these two types of markets, or even it could also be a blended market too, you want to understand what the dynamics are of that market before you really make the investment and take the plunge in doing one of those types of deals. All right. So typically those types of appreciating markets they're usually long-term holders of those types of deals, and usually it's again bigger deals, office buildings, hotels, industrial warehouses. Sometimes, again, depending on the location, they still produce rent, but the focus is really on a sale or refi long term, right? And in order to do the appreciating thing, you really have to be able to tolerate negative cash flow over some period of time to realize a big gain later. Like I said, both strategies can lead to some great wealth when executed properly. The key is identifying your primary investment goals, and whether that's immediate income or long-term growth. So understanding these core assets and the approach for each is crucial for selecting the right properties to match your investment style and your financial needs. Okay, so let's explore some of the most popular commercial real estate investments today. For cash flow investors, apartment buildings are a fantastic choice. A multifamily provides reliable cash flow that can be used to cover the expenses as well as a recurring cash flow over time. Okay, the cool thing about it is the folks that are living there, if you manage the asset properly, they'll cover all the expenses, and you end up with the NOI, the net operating income. That's what matters the most in these types of deals. Now, small and mid-sized apartment buildings, they can generate some nice consistent cash flow if you're managing it yourself, of course, right? However, I personally like to do 100 units plus is usually what we do, right? We don't do the small deals anymore. Used to a long time ago, and we still have coursework that helps people get into those types of deals too, right? So we do help folks get into those deals, right? Now we're doing bigger communities and that kind of thing. But in the bigger deals, the 100 plus units, there's plenty of demand for those assets, which is why I like to target those types of deals, right? But when you pair the great demand with the raising money in syndication, okay, you're able to raise money and use other people's money to invest in that deal, it's a solid winner. It really is, right? So those are the deals I like to do. Now, if you're looking to raise capital for the assets that maybe you have an asset that you want to buy, but you don't really have the capital, if you go to www.guidetocapital.com, go ahead and download the free ebook there. Okay, grab it and go ahead and put in your information. And it's a very comprehensive guide on how to raise money for deals, all right, for a syndication. So goes through all that. Go ahead and check it out. All right, totally free, totally free. Another option is self-storage, all right? I like self-storage. Self-storage is great. But it's a very different type of asset. It's a very different type of asset. It's a very, I'd say, active management, way more active management in my opinion compared to multifamily, at least on the onset anyway. Multifamily is cash flow driven by the tenants, okay? And we're satisfying a need for housing for a tenant, where self-storage relies on people just wanting to store stuff. Right? They don't need to store stuff. People need a place to live. They don't need to store stuff, okay? But from a market perspective, usually self-storage follows the multifamily space. So as the multifamily space goes up in terms of valuation, self-storage usually trails behind it, okay? So I like self-storage. I think but it's a completely different business that relies on market dynamics, vehicles per day, demographic of income, things like that. Not that it doesn't matter on the multifamily side, but it's more so on the self-storage side. And that's because you're involved with running a business, unless you have a management company or some other sort of thing that manages it too. So very different than multifamily. Very different than multifamily. You can apply a high degree of technology to those sorts of assets to make it totally hands-off, right? So meaning that someone can go there, apply online, or rather buy a unit online, show up, have a lock dispenser there. They just go ahead and swipe their card, get a lock, drive right up to their unit, dump all their stuff up, lock it up. I mean, the whole thing could be completely automated. Great business to do. Great for hands-off cash flow. But again, those sorts of deals are very, very different, rely heavily on market dynamics. It's a very different type of business, right? It's not like multifamily. Big fan of it. We just don't do it, right? I like to stay in my lane and like to stick to what we master, all right? Now, if for some long-term investors, some of those guys like to do vacant land, right? You'll find that, there's plenty of land out there, but I think that the only issue that I personally have with land is that it's one of those things that you're kind of similar to the appreciating thing, right? You're going to buy it and you're going to wait. And it's okay to wait if you really want to. If you're going to lock up the money there with no cash flow, that's cool. You can do that. But again, it's one of those things that if there's nothing really to drive the valuation up, then it's kind of like, it's a bit of a gamble in that regard, right? Zoning matters. If you have any type of plans, access to utilities, all those sorts of things can play a huge role in the overall valuation of land. So land can pay off big time, but it's a little riskier commercial real estate investment compared to some of the other ones that I mentioned before. The types of deals that I typically like to do are the value add multifamily type of deals, okay? That means what I'm trying to do is I'm typically trying to find a C-class asset in a B-type area. Okay, so if I think I covered this in the last video, or the last webinar rather. So go ahead and check out that last webinar because I talk to a great extent about the different A, B, C, D type of areas and assets as well. So go ahead and check that out. But typically, I'm trying to find this mismatch of C-class asset, B-class area, because if I can take the C-class asset, make the improvements and improve the asset, so now I have a B-class asset in the B-class area, works out great. I can drive the rents up, create a better experience for the people living there, and everything ends up very, very well. So you get the value that's created, and it's going to lead to major gains when you either sell it or refi it. Okay, so those are the types of things that I like to do personally. Now, we do a lot of that, and we also do a lot of development. Development is one of those things that we're doing to really satisfy the need for the housing crisis that we currently have in the United States. Even though we're currently in a recession, or going into a recession, people still need a place to live, right? So it's a matter of managing the dynamics around it. Okay. The bottom line is identifying the commercial real estate investment strategy that aligns with your financial situation and goals. Now, maybe you're looking for regular cash flow to supplement your income. Maybe you want to build wealth for the future. Maybe you want a balance of both. Now, in my experience, multifamily real estate can offer the best of both worlds because you get the cash flow from the asset and you also get the appreciation. If you're doing some of the larger deals, it's a great mix, especially if you're targeting a place like the Midwest, for instance. The Midwest has a great mix of, you get the steady cash flow without the wild swings of some of the areas like New York or Los Angeles or Miami or some of the other places they're gaining popularity very, very quickly and appreciation driving the value where it doesn't make any sense, right? I still believe that the Midwest is still the best game in town. It offers the best type of mix of these two types of things. You get the cash flow and the appreciation, right? Certainly you can, if you want to have a future growth type of scenario, you can certainly go into and learn the New York market, for instance, and understand how appreciating markets work, right? It's a whole different ballgame. That's one you play with a whole lot of capital, right, to do that. Because again, like I said earlier, you're operating at negative cash flow in most cases. But if you're able to get into the Midwest and you're doing these larger deals, it might be a better choice, right? Depends on your strategy. But with the growing demand of rental housing, like I mentioned earlier, right? Occupancy and monthly rents, they still remain fairly high. And as properties improve, the values are climbing over time, all right? And it leads to major equity gains. So you can get that recurring income along with that substantial appreciation over time. of course, understand that your risk tolerance has to be considered as well. So the rewards of commercial real estate investing are massive, but there are always risks too, right? Multifamily investing requires sometimes hands-on management to optimize your returns, all right? That means that you're gonna have to keep an eye on it. Either sometimes you have to be more active than you want to be, depending on what's going on with the property management, depending on the size of the asset. If you're dealing with a smaller asset, maybe installing property management may not be the best choice. Or if you do get property management, you have to keep an eye on them, right? If you're doing a larger one, it's a different story. Maybe you have to set up a whole different budget to hire a property management company, right? But take the time to evaluate each deal. Don't overpay for each deal. I know there's some guys out there that say, oh no, hurry up, overpay. It doesn't matter. It'll make it up over time. Don't ever do that. I always buy for cash flow. If you always buy for cash flow and you make cash flow the priority, you're gonna end up in a way better place long-term, in my opinion, okay? Now, with the right multifamily property, the right business plan, and the right knowledge, you can build the financial freedom that you've always wanted. All right, guys, so that's a wrap. I hope that you now feel a little empowered and hopefully know a little more about the commercial space. Hope you understand a little differently too, especially when it comes to cash flow and appreciating markets, okay? Those two things are one of the key factors you really have to understand, as well as how they tie into the various market sizes and where they're located too, right? So with the right property, the right plan, the right mindset, you can succeed. All right, it has been done before. And like I said earlier, we help people get into the real estate game too. So if you ever want to know more about how we do it, go ahead and reach out. Don't forget to download that ebook I told you about, guidetocapital.com. Free ebook out there, shows you how to raise money for deals too. So if you do want to jump in and you want to try to bring in other people with you on the journey, that's a great way to do it. Okay, it's a great way to do it. So you can also check out themultifamilyadvantage.com. And if you really want to learn how to even get started in the multifamily game, right? We have a 50-week mastermind that goes through and helps people get into the game too. So go ahead and check that out. There's only so much I can cover on a webinar like this, right? But like I said, plenty of free information on our YouTube channel. Okay, so this will eventually make it to the YouTube channel too. So go ahead and check it out there in the near future here. Hopefully next, usually 24 hours after we go after this simulcast here, we put it up there. So I'm rooting for you guys. Get out there, take some action, and create your financial future that you deserve. All right, guys, take care, and I will see you next week.